Government bills. This Council resumes the second reading debate on the Companies Amendment Bill 2018. Mr. Christopher Cheung, Chairman of the Bills Committee on the bill, will first address the Council on the committee's report. Mr. Cheung. President, in my capacity as the Chairman of the Bills Committee on the Companies Amendment Bill 2018, I submit the report of the Bills Committee and go over the salient points of the deliberations of the Bills Committee. The bill seeks to amend the new Companies Ordinance CO and 8 items of its subsidiary legislation to improve the operation of the accounts provisions, expand the types of companies within the reporting exemption, and provide for miscellaneous and related matters in relation to administrative, procedural, and technical requirements regulating companies and non-Hong Kong companies. The Bills Committee has held 2 meetings to study the bill with the administration and to receive views from deputations. The Bills Committee supports the main proposals in the bill which seek to simplify statutory procedures and remove ambiguities to reduce the compliance cost of companies in cater for the needs of SMEs. The Bills Committee notes that the new CO requires a holding company to list in its directors' report the names of the directors of all of its subsidiary undertakings. Considering the compliance burden of large corporation groups, the bill proposes alternative means of complying with the disclosure requirement by adding an option of allowing a holding company to provide such information on its website or by keeping a list of the names of directors of all its subsidiary undertakings at the holding company's registered office and making it available for inspection by its members. Some members of the Bills Committee have expressed concern that allowing a holding company to provide the names of the directors of all its subsidiaries by keeping the list at the holding company's registered office may not facilitate access to the information by members of the public. The administration has explained that information on all companies, including the names of the directors of a holding company and all of its subsidiaries, is available on the company's register, which is accessible by members of the public. 3 types of companies would be eligible for reporting exemption under the bill. They will be able to adopt simplified accounting and financial reporting. Some members of the Bills Committee have expressed concern about the size criteria of companies qualifying for the reporting exemption and inquired if the administration would review the criteria taking into account factors such as economic environment, surge in property and consumer prices, and inflation. Members also expressed concern about the criterion of small private companies of assets and revenue not exceeding $100 billion and asked the administration to consider reviewing such criterion. The administration has advised that the bill aims to expand the scope of the reporting exemption without amending the size criteria. That said, the administration will keep the implementation of the new CO, including the size criteria, under review on an ongoing basis. Clause 92 of the bill adds a new section to the company's disclosure of company name and liability status regulation so that a company which has both an English name and a Chinese name is allowed to display at places, for example, its registered office, and to state on its website and in certain documents, for example, its business letters, only its English name or Chinese name. On the other hand, Clause 8 of the bill proposes to amend Section 81 of the new CO to the effect that if a company has both an English name and a Chinese name, its articles of association must state both the English name and the Chinese names. The Bills Committee has inquired why different requirements regarding company name are proposed. The administration has responded that the policy intent of the amendments is to enable a company to use either its English or Chinese name for purposes other than in its articles. For example, in the company's common seal, its business cards, and stationery. On the other hand, if a company has both English and Chinese names, the articles must state both names, as the articles are the company's constitution and a statutory contract between members themselves and between individual members and the company. The articles are required to be delivered to the Registrar of Companies for registration and be available for inspection by the public. Hence, it is necessary that the company, if it has an English and a Chinese name, must state both names in its articles for public search. The Bills Committee notes that the administration will propose technical and textual amendments. The Bills Committee does not oppose to them, nor will it move any CSAs. The Bills Committee supports the resumption of second reading debate of the bill. President, I would like to state my personal views. As I have said, this is a simple legislative amendment. This is to reduce the compliance burden of SMEs. There will be simplified reporting and financial arrangements. This will reduce their operating burden. All these will enhance our competitiveness as an international trading and financial center. Directors' names don't have to be stated in the director's report as a mandatory requirement. This will reduce the workload and is also environmentally friendly. This has not undermined the right to know on the part of the public in any way. The director's report and directors' names can still be accessible by the public through various means. This will reduce the cost of enterprises. This will make room for SMEs to maneuver and survive. This shows the new philosophy of the Chief Executive, Mrs. Carrie Lam, in removing barriers for SMEs. The SFC, the Monetary Authority, should be encouraged to remove barriers and to strike a right balance between regulation and cost. One should not just blindly follow international requirements by imposing more burden on SMEs. It's just like this morning there was the financial institution loss absorbing capabilities regulations. It puts in place resolution arrangements for financial institutions that are too big to fail. This will in turn include medium and smaller sizes banks. That runs counter to the administration's move to remove barriers, so that should not be supported. I support these measures that would improve the operating or business environment for SMEs. I ask members to support it as well.
Ms. Sari Lee. President, we are now in the second reading debate of the Companies Amendment Bill 2018, the bill seeks to allow some small holding company of small companies to use a simplified reporting, accounting, and financial reporting, and I think these have responded to the requests of the industry, and the industry has reflected such views to the Companies Registry and the administration a number of times. We thank the administration for amending the new Companies Ordinance. Now, I think we still have a vivid memory of how we scrutinized the Companies Bill in 2010 when the last term of LegCo was close to its end. There was a major filibustering, and I think many members remember this. Some members wanted to sabotage the government's proposal for reorganization, and they chose this bill for filibustering. It took us 3 days to complete scrutiny of the bill, and the bill has been implemented 5 years, and I agree to the various amendments that have been introduced. Since I have some views, however, for the government to respond, the amendments are in response to the demand of the industry to lower the compliance costs. And I think companies can only choose on the 1st of April. Now it is the 28th of November. If we can gazette the bill earlier, well, because many companies have their financial year ending the 31st of December. Now, if we can enable companies with their financial year ending on the 31st of December, we can help these companies to lower their compliance goals, and then they can go for the simplified reporting way for the whole year. I hope the Secretary can respond to this point, and I think deputations mentioned this as well in making representation to us. We're grateful to the Company Registry for being very accommodating. They provided workshops at the request of DAB, and I understand the registry has been going to different places to answer the queries and of questions of the industry in relation to the implementation of the CO. The CO is not easy to understand, and there might be ambiguities when it comes to implementation. So I hope the administration can continue to operate its hotline and to give briefings. And with this new round of amendments, I hope there can be another round of public education and explanation so that members of the trade and also accountants and so forth can have a better understanding of the bill. With these remarks, I support the bill.
Does any other member wish to speak? Now I call upon the Secretary for Financial Services and the Treasury to reply, then the debate will come to a close. Secretary. President, first of all, I would like to thank Chairperson of the Bills Committee, Mr. Christopher Cheung, as well as members, the Secretariat, as well as the legal advisor for their efforts put into the scrutiny of the bill. I thank deputation and individuals for expressing their views. After we have introduced the bill in April this year, the Bills Committee has held 2 meetings to discuss about the policy intent as well as various provisions of the bill. We have considered the views expressed in the scrutiny of the bill. We have also looked into the various provisions. We have submitted commissions
to clarify the definition of certain provisions, and we will make certain technical amendments. Later on at the committee stage, I will move the relevant amendments. First, about the policy intent. As I said when I moved the second reading debate, the bill amends the new Companies Ordinance, Cap 622, which commenced operation in March 2014. Since the ordinance took effect, it has provided a modern statutory framework for the incorporation and operation of companies in Hong Kong. A number of measures were introduced to simplify statutory procedures, reduce companies' compliance costs, and cater for SMEs' needs. The latest amendment seeks to reflect developments after the ordinance took effect, clarify the policy intent, and delete ambiguities and inconsistencies. Further relaxation was made to certain requirements in the ordinance to provide greater flexibility for SMEs to facilitate their business operation. The amendments are technical in nature and are divided into two groups broadly. The first group of amendments is to reflect the new developments after the commencement of the ordinance. There are two aspects. First is to expand the scope for streamlining financial reporting to allow two other types of holding companies of corporate groups to benefit from the exemption measures on financial reporting. The second is to update the accounting-related provisions in the ordinance to align them with the latest developments in financial reporting standards. On expanding the scope for streamlined financial reporting to allow greater flexibility to SMEs which meet the size criteria, we propose two other types of holding companies of corporate groups to benefit from exemption measures in financial reporting. These two groups of companies are: one, holding companies of corporate groups comprising small private companies or eligible private companies or small guarantee companies, provided that the holding companies and all their subsidiaries meet the size criteria. And two, holding companies of groups of small private companies, eligible companies, small guarantee companies, or the mixed groups described in paragraph 1 above, with non-Hong Kong subsidiaries, provided that both the holding company and all of its subsidiary companies, including non-Hong Kong subsidiaries, meet the size criteria. We note that some members of the Bills Committee are concerned about the size criteria of companies qualifying for the reporting exemption and asked if factors such as inflation and capital costs could be taken into account to review the criteria. We would like to point out that the bill seeks to expand the scope of reporting exemption without amending the size criteria. However, we will keep under review on an ongoing basis the implementation of the new CO, including the size criteria. Another amendment to incorporate the new developments after the new CO was implemented is to reflect the introduction of the new Hong Kong Financial Reporting Standard 10 issued by the Hong Kong ICPA, in which the definitions of holding company and parent undertaking were revised. Hence, we propose the relevant amendments to reflect the latest accounting standards to avoid inconsistencies between the new CO and the accounting standards. The second group of amendments are to clarify policy intent and remove ambiguities and inconsistencies to assist in compliance. The major proposals include: one, to align the requirements of display of company names between non-Hong Kong companies and Hong Kong companies; two, to align the penalty provisions in relation to financial statements; and three, to streamline and clarify technical provisions. First, the new CO and its subsidiary legislation set out detailed requirements regarding the display of the name of a Hong Kong incorporated company. For example, to display the company name in a way that may easily be seen by visitors. However, there are no corresponding provisions for non-Hong Kong companies. We propose to empower the Financial Secretary to make regulations on requirements on the display of company names and the disclosure of liability status of non-Hong Kong companies and the relevant offences, so as to align the relevant requirements for non-Hong Kong and Hong Kong companies. Second, Currently, the penalty level for an offense relating to the provision of financial statements and reports, which is specified in the company's revision of financial statements and reports regulation, Cap 3622 subsidiary legislation F, is lower than the penalty for a corresponding offense relating to the original financial statements. Therefore, as I said in moving the second reading debate, when LegCo scrutinized the subsidiary legislation in 2013, the government undertook to review and remove the inconsistency in the penalty levels. The proposed amendment will align the penalty levels for the relevant offenses. Third, on streamlining and clarifying provisions to facilitate compliance, we propose a series of amendments. In particular, in financial reporting, we propose amending certain technical provisions on accounting and reporting, including allowing holding company, which is also a wholly owned subsidiary, to prepare consolidated financial statements, relaxing the requirement that a holding company must list the names of the directors of a subsidiary company in its directors' report. This amendment was proposed considering the compliance burden of large corporations. Holding companies can opt to provide such information on their website or keep a list of the names of the directors at the holding company's registered office for inspection by its members. We note that some members of the Bills Committee expressed concern that allowing a holding company to provide information on its website or keeping it in the company's registered office may not facilitate public access of the information. We must point out that information on all companies, including the names of directors of companies, is available on the company's register for public inspection. Hence, we believe that the proposed amendment has struck a balance in enhancing companies' transparency, safeguarding the interests of the company's members, and lowering compliance cost. Furthermore, the other amendments are textual or technical amendments, aiming to remove ambiguities and ensuring the consistency of terms among different provisions in the new CO. Overall, the bill has streamlined the provisions in the new CO. Requirements have been relaxed, in particular to give greater flexibility to SMEs in compliance, including granting more exemption measures to SMEs in preparing financial statements, providing more options to holding companies, and streamlining repetitive requirements on company incorporation. As we promised in the Bills Committee, the company's registry will step up publicity work to enable companies, especially SMEs and other stakeholders, to understand more about the amendments. Publicity measures include distributing publicity leaflets, setting up an inquiry hotline, and holding seminars for stakeholders. President, the amendments can enable the new CO to further meet with the existing accounting standards and reduce compliance costs. This can help enhance Hong Kong's competitiveness and consolidate Hong Kong's status as an international business center. We have consulted the Financial Affairs Panel of the LegCo, relevant stakeholders, including professional bodies and chambers of commerce, and the Standing Committee on Company Reform. They support the proposed amendments. President, as referred to by Ms. Starley, the commencement date. Well, it will commence operation starting 1st of February 2019, bearing in mind that the company's registry has to do preparatory work and publicity work, so the date cannot be advanced. I appeal for member support to endorse the bill and the amendments to be moved subsequently. So I speak. Thank you, President.
Hi.
I now put the question to you that the Companies Amendment Bill 2018 be read the second time. Will those in favor please raise their hands? Those against please raise their hands. I think the question is agreed by majority of members present. I declare the motion passed. Companies Amendment Bill 2018. Council now becomes Committee of the Whole Council to consider the Companies Amendment Bill 2018. Members may refer to the appendix to the script for the debate and voting arrangements for the bill.